Morning traders, welcome to the Traders Lab. I'm your host, Tom B. Can I please get a screen and audio check in YouTube and the Bookmap Discord Trader Lab community? Thanks, Lucky. Marty, how we doing in YouTube? Okay, thanks, Stephen. Well, good morning, everybody. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for stopping by. This stream's about integrating Bookmap order flow tools with auction market theory using a volume profile for structuring the intraday developing time frame. Today's a pretty interesting day. Not the easiest day, I would say, if there is such a thing in trading, but it is quite interesting in the sense of market mechanics, how the market works, and the actual conflict that it's going on in the market. It's two-sided trading. We're going to get into what that is. It's actually called mean reversion. And what makes today really interesting, we're going to talk about it, is the conflict that is created with multiple time frames, where a higher time frame, let's just assume for a moment, is attracting the market. And in the intraday developing time frame, call it a shorter time frame, we are in a two-sided trade. So while we are in a two-sided trade, we can still come out the top side of today's market because the higher time frame levels, if you will, and this is auction based, and I'll get into that, are attracting the market. And it's actually rather conflicted, and that's what creates the two-sided trade. So it will resolve itself, and it'll be very interesting today to see which side actually takes the ball. Right now, it's kind of like two-sided, but there will be a, quote, winner, and we are suspecting today, and it's just always possibilities, and I'll get into all that, that we're going to have what's called the neutral day in the auction world or profile world. And that means you take out the first hour's low, then you take out the first hour's high. And that is interesting because in between, it creates a rotational process, which is what we're in right now. We have plans for that in the Trader Lab. We also, like any other trader, cannot predict the ultimate outcome of this two-sided battle, if you want to think of it that way. But with trade plans, you can attempt to get in alignment with it and also have a trade management process for the current condition. That's what the Trader Lab is about, helping traders understand the business of trading, how it works, why it does what it does, and also to recognize changing or evolving, developing conditions, and then have specific plans for those conditions. Now, it may seem complicated, but I'll tell you, in my opinion, and from my experience, the complication is the randomness and the uncertainty as traders. That is the issue for us because we're always going to be trying to adjust what we're doing to what we perceive to be the direction of the market. And when you're in a two-sided trade, that direction is changing. So you're getting on one side, then you're getting the other side, and you can easily overtrade, take a lot of stops. And you really need to understand when the market changes condition, you should or you might consider having a different plan for the perceived condition rather than a one-size-fits-all. Just a thought for you guys. General disclosure. All Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember, this is not a trade calling room. If we get to something interesting, of course, in real time, we'll discuss it. If you're interested in real-time narration, there is a library of webinars in the Bookmap Discord Trader Lab community, some of them up to 5 hours long of real-time narration. So you could see this process in many different transitions, different configurations from directional to rotational, back again, coming and going, whatever it is. And but you can see those, but that's all available. So my time is somewhat limited, so here, what I've found is the most helpful for developing traders and experience. We're all developing, by the way. I'm going on 45 years. I'm a developing trader. I'm always looking for something interesting. I'm always thinking about it. Aren't you? That's what trading is. It becomes, I think, a passion. It's a business. Imagine having a passion for your business as opposed to, quote, going to work. Now, I do experience it kind of like a job, but it's a job I look forward to every day. That's, I think, the kind of thing you'd like to do if you can. Now, I want to show you something interesting. Now, I took 2 longs this morning. The first one was a stop, and then the second one did okay, but missed its target. And I want to show you these. And actually, I want to show you a couple other little pieces here. This is called a microcomposite volume point of control. Now, so you understand in profile world, if you will, it's all volume based. And as you go up in time frames, this is an intermediate time frame, high volume area. And the reason high volume is important is because the market tends to come back and check high volume. It's no different than you being a shopper. Think of trading as shopping. It's a very easy analogy. Shoppers, if a price is too high, the market will leave it and go to another location to try to find too low. If we might have found too low, which who knows, then we can be attracted to come back here. So that's one part of it. And yesterday, now I'm going to take you one little piece, if I can get this to scroll, because I have to show you why. It doesn't do us any good to just make it up. It's random anyway, but let's look at why. This is the highest retail price in the consolidation we've been in. You know, we broke down to the low side, come back in, and we came back up. This is the highest time frame volume in this consolidation. So think high time frame. In yesterday's shorter time frame, in other words, the daily time frame, this was the highest volume. It is an attractor. The market has a tendency underlying to come back to these levels. Okay. So when I'm thinking longs this morning, I am trading this and let me just see where else I got up here. And this, the ETH high. So for me, longs were going here. I think is that the right price? Hold on a second. Losing my mind. I think so. And here, and then the ETH high. So that was my long plan. Now, another part of my plan, and I'm just sharing some ideas with you. Let's think about this a little bit. If you watched yesterday's stream and you remember what happened the day before, we sold off hard the day before, yesterday. In the morning, we were on the short side, sold down hard, took out the previous day's low, trapped sellers, the sellers yesterday, and then the sellers from the day before. That created a short squeeze after the morning selling, okay? So that got our longs in the market. So what we anticipate, and this is not a prediction, it's the way the market tends to work. Remember, this stream's about market mechanics, is the market goes up to go down and the market goes down to go up. Why does it do this? Because there's stops always on both sides of the market, right? So if the market goes up yesterday, the potential based on statistics is to have continuation buying today, short covering, okay? And then the possibility, and again, possibility is hopefully to hit upside targets. And then if somewhere we run out of buyers, then we get short to take the longs out that are in here from yesterday and the early buyers this morning. Same thing as yesterday, but just turned around the other way. So that's the plan, at least for me coming in. And then it's whatever, whatever. Oh, this was at 78. Okay. Got myself a little confused here. So ETH high is a target in this, 78. So this area here, this, and this were the long side targets. And we might still get to those. There's no way to know. So we don't worry about knowing. There's other traders who, of course, I'm sure know. Most of us mere mortals do not. Now, here's what I want to show you some. This is order flow. This is Bookmap, of course. And let me show you what this is. this was a swing low in the ETH. This is absorption. And how do we know? This is delta. Delta is aggressors. Now, aggressors are made up of initiators and stops because they become market orders. Delta measures that. So I know here there's buyers. Okay, so I know this. And now we get the RTH open. Now I have two ways to participate in this. I think this is, yeah, I think that was it. I have my sellers. I have absorption here. I have absorption here. And I had absorption here. Now, I'm going to take you into the first trade. And this was a stop for me. I'll show you. Don't mind showing you because this is the real world. So I get my open, RTH open. And now I use something called structured trades. Now I'm thinking, remember, buying in the morning because of yesterday's longs, get buyers in, run out of gas, but I don't know how high it'll go, of course, and then get short to take out the longs from this morning and potentially take out yesterday's low. That's the plan. So that's, and then what? Whatever, right? So first trade. Now I use microstructure. So I get down, and this is one of the things about Bookmap is you can open this up and go as, minute as you like. So this is the RTH open right here. I get VPOC migration. This suggests that maybe this is too low. Now remember, was my absorption? It was all the way out here. So I'm thinking, well, the buyers started over here. So if I get an opportunity to read this, I'm going to take a long. So that's what I did. I got long. Now for me, this is like 5 seconds in. Now I'm okay with that. I also know it's a very aggressive trade, and I'm okay with that. I also suggest in Trader Lab that developing traders don't trade this, that they narrate it so they can get unconscious competence. So because you have to react very quickly. Because the goal is to get risk neutral. So if you're not getting in till here, that's too much risk, right? So I try to execute like right as soon as I recognize. So I had my buyers here. I come down here. I should say I have my buyers here. I have my buyers here. As soon as I break above and my VPOC moves, this is where I get my long. So let's just look at it. And I'm going here for my scale. Okay, let's just watch. And I get taken out. Okay, so now I'm taken out. And of course, you know what you say when that happens, right? Let me come back here and show you. The absorption was here. Absorption. So long, stop, grunt, and a few other things. Absorption here. This is before the RTH open. You see my buyers. So I was looking for another leg here. So just so you understand what my thinking was. I'm not saying it was, in hindsight, you go, well, maybe I wasn't thinking so well. But it's a trade. That's all it is. So if my buyers absorbed here and I had that, then instead of getting my continuation, another leg, I got the opposite. Okay. But this is where my buyers were, and this is ETH. I come down and test the buyers. I get long again here, and then I know there's buy stops here. And then I have overnight mid, and now I'm running. Now this is interesting. This right here, I'm going to mark this for you. So when I put a position on, what I try to do, and I'm not saying this is a good idea, I'm just saying it's what I do. It's not necessary for anybody to do it. And, when it works, it's great. And when it doesn't, it's like any other trade. Right here is a micro high volume structure. Now I'm going into fractal. Now remember, overnight mid, So then the next targeting is up here, here, and then this. So this is my trade for the longs. Now, right here is micro high volume. I'm going to show it to you so you kind of see what trading in fractals is. And by the way, if you have questions, please post them. I can't see the chats right now. I can't, they're on different monitors covered up. So it takes me a little bit to do that. So just be patient. Coming up, I see absorption. So this is the absorption detector. It's showing me that there's a seller here. Okay, well, fine. Buyer is here. As far as I know, right here, it's going to go. You know, it's just going to keep going. But let's look a little further. So my seller is here. They get absorbed. So this becomes support. Seller is here. Is this too high? Because the sellers are here. Now we have a seller here. We have a seller here. If I break down from here, then we're going to counter rotate. Instead, I get my buyers here. Looks like we're going to, you know, these guys are stuck right here, the sellers, because my buyers are there. And the other way I think of this, I'm just telling you a way to visualize these things, is if this is a seller and a buyer's above the seller, that is suggesting right here, think of Pac-Man, that the buyers consumed the seller. Passive. Okay, so there. So now sellers are below this. This might be a break. Does the opposite. It comes up here. So the buyers are here, and off we go, right? Now, right here, I see a seller, you know, and these guys are under the bus. So this is support right here. Inside of this, look at this like a consolidation. Now, in the fractals, this is an auction. And of course, it can resolve either way. It can go bing or bang. And the way you can see this using a profile is the volume. This is called the distribution, and it is a distribution of volume. And just to give you a little clarity with this, I'm just going to draw a little box around it. This is what a consolidation looks like, you know, that. So this is where the sellers are. This is where the buyers are. Sellers were here, thought it was going to break, but the buyers are here. That's why you get the rotation. And what happens up here? The sellers were up here. That's why this stopped. We come up here. Sellers are here again, selling iceberg. Buyers are here, break below it. That suggests rotation. Okay, I'm saying that's all it is. So this now is resistance. I come back here. Now, the yellow line represents the fair price. Now, at this stage, there's no way to know, at least for me, others may, that because all we might do here is go here, come back here, and then come back up here. Or, let me give you the or. This is called mean reversion. Now, you don't know, it's just not going to keep going until it changes, right? Nobody is gifted with foresight. Hindsight, there's a lot of folks who have hindsight, and they post all about their hindsight. But those who are in the real time, in the real world, don't know what's going on until they know. So here's what happens here. Take the long, get the scales, hanging out, having a good time, reversal, get taken out. Then what? Then here, and now right here, I'm going, what's going on? For me, I'm going, I don't know. But I do know this is very important in the overnight high. So for me, thinking now, it's very conflicted for me because I know I can go two sides. It's two-sided trade. And the fact that we had this selling might be the end of it right here, and we could fall out the bottom. So it really is kind of up for grabs here. So, but this is now, I'm going to give, now I turned around and I started trading the short side. So, and part of the rationale was, at the time, we didn't get here. So I looked at this and I said, well, we check this, we pull back, we come below, I see absorption here, I come back above. So I have choices here. I can start getting short, or I can just, because don't forget, my thesis is up first, then down. So, and I also know we can have, remember, a neutral day. All this is posted in TraderLab. So we could come out the bottom, come out the top. The mixed bag is, I think, the term is. So this is my resistance at the moment. And the reason it is because this is where the consolidation is, and I fell out of it. I kind of look at these, and it's just the way I mentally make sense of all this, is shopping. So if this is too high and this is too low, and then the buyers, if you will, the buyers go, I'm not paying that. In any time frame or fractal, they leave the store and they come back to the supermarket. This is like your Saturday night down the corner store. Prices are higher, but if you need that pint of ice cream to watch the movie, you'll pay it, even if it's overpriced. But the majority of shoppers, if this price is too high, are not going to do business up here. They're going to leave because they can buy it for less down here, if that indeed is too high. Then I can come back to the supermarket where there's more volume. The higher the volume, the more meaningful it is. It's like gravitational pull, one way to think of it. So this is not strong, but it's exhaustive right here. This is more meaningful. So the market tends to be attracted. So if I come back to a level, I can rotate. So this is now my resistance. So the choice becomes, do I take shorts or do I look for longs? Nice question, isn't it? And I will tell you that I'm looking for shorts. So this right here, I read the absorption. I take a short. So what I'm trading now is something called mean reversion. I'm not saying, and I don't do great in these. I tend to do a lot more trades, and it's a lot more in and out, only because I'm trying to get an alignment. It's just the nature of it for me. Others may have a better way to do it. Me, not so much. So I come down here, and this is absorption. So I'm seeing buyers here. Buyers. And we have that big report coming at 9 a.m., right? So the ISM, it's a biggie. So I always suggest to traders, unless you're risk neutral, you don't trade because the book thins out and managing risk becomes an issue. So you have to be risk neutral for this. So I see the buying here and I just get my scale. What I do is I get a scale and I keep my stop, break even and just let the chips fall where they may. But here's the buying. Here's the break, back to the mean, and back here. If you can't get below this buying, then we're going to go the other way, and you're coming into the report. Now we come here, we get the target. I think I narrated in the trader. Oh, yeah, here it is. I took a long. Let me show it to you. We got the report 9 a.m. So I'm out. I don't trade the report. Well, let's just say I don't suggest anybody trade the report unless they have a specific plan for it. So for structured traders and developing traders, it's not a good place to interact, in my opinion. So we get the report. It's a bullish report, fine. Now we pull back. Now remember this here. What created this? It was too high. So right here, we come up. It's before the report. I can't do anything. I don't want to do anything. I get the report. Now watch. What is this? Why is it along? This is a little advanced, but it is Trader Lab trading. This was too high, right? The buyer said, I'm not paying that. Support resistance. So that's resistance. Okay. And in the condition we're in, it's outside in trading. Outside in trading. And what happens down here? Outside in trading. It's two-sided trade. So you kind of have to pick a side, right? So my pick of a side is the short side until the report. And then it's, Do you feel lucky, as Dirty Harry says? So 52 after the report is my level. It's right. And here's the report. Now 52. So I take here's my long. Now I took a long here. And here's how the trigger works. So I get the report, and of course, your head spins a few times. And we come back here. So I'm watching here. I see the following. Okay, too high. Don't forget, this is still a report. Absorption, selling icebergs. Sellers are here. These guys were absorbed over here. You see the sellers. Why do we go up? Absorption. So I know this is too low because this is the last area where I had my sellers. They were absorbed. I get my break high. This is suggesting support. I pull back. Now I'm just looking at it because I'm not going to buy it here. I can't. And if it runs away without me, I'll wait for another location. I get my sellers here and I come to my location, exactly to the location. Now that doesn't mean it won't keep going down. That doesn't mean anything. It's a level of potential behavior. My absorption is here. So we come here and I've got my sellers here. So as far as I know, it's going to keep going. But what happens here? Right here, I'm against support. Remember, I don't trade in the middle of nowhere. Sometimes turns out it seems that way, but I use locations and levels based on participant behavior. So what was resistance becomes support, and I'm leaning on this. And right here, I see a trigger, and I'm going to show it to you. So right here, this is support, and in this structure here, you can see the high volume. Okay, so I'm looking at the volume in this right here. This is like, you can see this is a consolidation. Let me just show you quickly. Now, obviously I'm not using these boxes, but it's going to help you see the sellers are here. There's an iceberg, and we don't know, except this is support. And I run out of sellers here and the buyers are here. How do I know the buyers are here? Because we didn't go lower. You're going to say, oh, that's brilliant. What it is there's a passive side. You can't see them. All we can do is see after the fact, if the market goes up, why did it go up? Because there's buyers here. Now the sellers are here. Okay, that's why we rotated down. Support, the buyers are here. Might just keep going. Might go to mid, might go to V, could do anything. I see a change right here. So now I've got my volume here. So let's look. Long is here. Then I'm back on the here we go again train. Going for this. So scaled, and this is my target. And if we can get over yesterday's high, it could be a nice payday. I was going for this as an extended target. Just telling you that was the trade. Now let's look further. Now, I could have done a little better on this trade. I didn't do well with it because I stayed further back on my trailers. So in the end, I ended up giving back my runners dollars, But let's look at the reversal. Now, there's a few ways to look at this. So, and I think I'm looking at it and I'm thinking, no, you could have done better with this. But, just one trade. So coming up, there's absorption here. That's this purple, and that's the selling iceberg. So I'm seeing icebergs. Those are limit orders, and they're absorbing the buyers. So when I see the absorption, I'm very interested in seeing what happens. In other words, do the buyers still perceive this as too low, and they're going to absorb the sellers? Because that's really what we're trying to figure out. I get a seller here. Might be this seller. Oh, really? Sell some more. And then if we get above these sellers, then we have the potential to go higher. I get my sellers here. What am I holding? The micro right here. I trade in something called fractals. You guys think of time frames. To me, they're not. This is a consolidation in the micro. So when I see the chop, it's an auction. The buyers are here, the sellers are here, right here. The buyers are here, and then the buyers are here. So I've got sellers here, buyers absorb them. Don't forget there was a buyer here. Now the buyers are moving up. They're here. The sellers are here, the sellers are there. I take out the sellers. The buyers are now here. Let's come back and look. Where were the buyers? Down here. Here, here. Buyers are getting more aggressive. Sellers are taking their shot and they're not getting anywhere. Buyers, buyers, buyers. Notice that's why this is important. Now, buyers are here. What happens up here? More sellers. So these guys are absorbed. This guy is absorbed. Buyers are here. Sellers are here. Buyers are down here. Sellers are here. We go up. What does that say? They were absorbed. Where's my buyers? Under here. Buyers are here. Buyers are here. I should say buyers are here. Sellers are here, because there's your absorption. You notice we come right back. So the sellers, it's like two armies. So I visualize this like there's always two sides, right? There's a passive side and an initiative side. But buyers are passive, sellers are passive. And then you've got the delta, which is aggressors. Again, initiators and stops, which become market orders. That's what all delta is. So delta is not a full picture. Buyers are here. Now we come up here. Okay. Now here, what do I get? Sellers here. There's your icebergs. And this is kind of how, what I try to do with this is I try to read it as best I can. And I only know in hindsight what's happening. I can't tell what will happen. I trade with statistics towards targets. So that's kind of how I deal with it. And like everything, some days it's a lovely thing, and other days it's like, what's going on? Because that's part of the random nature of this business. Now let's look at this. Now, and I did not do a good job here. I don't always do a good job. What are you going to do? Because I trade the targets. So I have to decide before the fact, my plan is, do I sit through counter rotations and let it take me out? Or is it only going to be, a little of this and then continue on? If we don't know the answer to that, which I don't, then the answer is the trade plan that is vetted, that gives you a statistical edge, not the outcome of this one trade. So for me, it was hold on and, go for these statistics. So I see the selling here. I have gotten, past some key targets here, and I have this. So this and that. So I was thinking, well, we're on our way up. It's possible we can squeeze out yesterday's high and then rotate down. So I was this is where I was going. Okay. But this right here, this is a warning Will Robinson moment. Will Robinson is from Lost in Space. It was a TV show. And the robot, or I think he said Danger, was a friend of a 12-year-old. And it was kind of his saying was warning, So warning is right here. So there's the sellers again. So buyers are here. Passive side is here. Buyers are here. Passive side is here. And there's icebergs. Buyers are here. 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 Break. High volume is here. Right here is the problem. Now, where's my next level of support? Here. This is where the buyers were. So I got out of it here. Unfortunately. But, threw some burgers on the grill. What are you going to do? Now, notice where this is. Now we do the Acapulco cliff dive. So I'm going on now. Let me scrunch this up for you. This is now mean reversion. So we come back here. Now these trades, I don't call trades because nobody needs to take my stops. You know, I take them too. We all do. It's just costs of production and overhead. I come back here. That suggests to me now the condition of the market has changed. We are now in what's called mean reversion, and that is rotational trading. So it comes here, and I have no short, okay? When I come under here, now I'm going, okay, this was where the buyers were active. You see the rationale? This is where the sellers were active. I kept my stop here because I know if I get below this, there's going to be a bazillion stops under here, which is what this is. So down we go. And I'm going, So I'm thinking now I wanted to get on that short plan because that was my thesis. Up first and to where nobody knows, and then short to take the longs out, right? Top of the stream, I go over all of this, and it's all posted in Trader Lab, probably around 6 in the morning or somewhere. And we have an interaction. The Trader Lab is a community of like-minded traders. We work together. We have all different types of traders, different time in the business. Our senior traders over 50 years. This is going to be my 45th year trading. So we all come from a different place and done different stuff, and nobody has got there's no answer in the sense of certainty. There's no holy grail. There's not that special indicator or do this all the time and something works. You're in an uncertain environment. Emotionally, it's very difficult for us to operate in an uncertainty. You need statistics as a way to make this nebulous behavior tangible. That's what we work on in Trader Lab. It's statistically based. It's how casinos operate. Statistics. Structured trades. And then the outcome is random, and it's not one trade, the last trade, or even the last 5 trades or whatever. It's all of them over a large sample size. Same way casinos operate with their games. So, resistance, buyers, absorption, who knows? What do we see here? Let's come back. I'm going to take you to the short I took. And we were having a lively discussion in Trader Lab because there's traders long, there's traders short, and there's traders are going, I'm not having any part of this. And they're probably the smart ones. So, but I don't know. So I just trade. Volume is here. Buyers are here. Right here, no clue, right? Volume is here. This was my support. We broke under. It becomes resistance. That's what it looks like in the profile. Remember, it's one of these things. And if this is too high, I can come back and check it. And if it's too high, I'll come back to the developing volume point of control. So this sets up something called mean reversion. So, but I don't know that, of course. I don't know this either. This is just, what's going on? Oh, we're going to wherever. And I don't have anything until here. When I see this, now I see my sellers. These guys were absorbed. Now I still am in the clueless zone, but it's a suspect. Here's why. Buyers are here. There's iceberg. Very nice to know. Level is here. Sellers are underneath these buyers. That is absorption. Now the sellers are here. The buyers are here. Let's watch. Now, what do? I break below those buyers. Why did we go up from here? The passive side, and I know this is minutia, but this is kind of how you combine order flow and structure and the auction. So right here, when I break under these buyers, and the passive buyers are here, and the delta is here, and these buyers, I'm underneath all these guys. Sellers took control here. Sellers are in control here. It's now a short. Now, the volume is sitting here. You can see it there. This sets up a short. And where am I going with this thing? Here. That's my first target. And then I'm holding because I'm thinking, okay, my plan was now we got the longs sucked in here. We got the longs from yesterday, and the stops are under yesterday's low. And then we missed the ETH high, which is a high probability target. So now the ETH low is on the menu, and yesterday's low, and the bonus round, if this worked, and I don't know what's going to happen. I suspect we're just going to rock and roll around. This is the outside target, 5,700. So when I was putting the shorts on, I was going for this and the ETH low. So this would be another scale. And if you get under yesterday's low, then 5,700. That's a pretty good trade, I think. So when I'm putting this trade on, I'm doing it with the idea of getting, a 40 point or, and scales along the way. So is everybody with me so far? I just want to give you an overview of thought. Whoops, hold on, guys. How are we doing in YouTube? This making some sense. If you have questions, please post them. BX, no, it's not. There's no private exchanges. One second, guys. A little problem here with some. Okay, sorry. Okay, back. So I'm going for south of the border. Now, right here is absorption. So and here's 1,000 stops coming out. Thanks for playing. Buy icebergs. So what you'll often see is when you get these sell stops, you're going to see the absorptions are going to be the icebergs come in on the other side because they need sellers so they can get long. Just saying. Here, buy stops here, 107. You see the selling icebergs there. It's something to observe. It's not in and of itself. It's not a reason for action. You have to define your trade management process and what you use to make decisions. And then you just got to follow it because there's no way to know. So for me, I'm in the short planet here. So that's my outside edge. And then we come down here. So let's look. So now we have another little piece here. At 9:30 Central Time, we have something called the IB. And it sets at 9:30. Right here. If you take it out, then the possibility is to continue, which is what I'm looking for. So I'm sitting short, going, out the bottom. We come out the bottom. Now, when we come out the bottom, I'm looking at it to continue going down, of course. But we have another trade in the Trader Lab. Now, I'm going to mention this, and there's two ways to work this. It's called the IB failure, and what the IB failure is a mean reversion trade. Now, we're in a balance, and of course, my thought, based on my plan, is that we're going to fall out of this and continue down. And again, the reason is there's sell stops under yesterday's low and targeting down below, and we have longs in the market. Joyous. But here, I see absorption, and I see the break high. This is a microstructure right here. Now, right here, clueless, right? Right here, it breaks. That suggests lower. So right here, I see my buyers. I have a stop sweep. I have sell stops. It's wonderful. And I'm going, okay, let's go. And now I see my buyers here. And right here, I am looking and you'll see where the volume is. I'm going to draw a little line so you can kind of just see the structure. So right here, I'm going, you got to get below this. We break low. Now, I think that I'm good, right in here for the short. And what happens? I get my sellers below here. My buyers were here. My sellers are up here. So I'm going, okay, let's go. And what do? We come back inside. Now, this is a structured trade in TraderLab. Now, it's up to the individual trader. This either is cover your short because now we're going to mean revert and come back here, or it's a long back here because we're still in balance and we can squeeze the shorts out. So it's either or. Now, so needless to say, Tom gets taken out. I did not take the long because I'm leaning short, right? So I don't flip-flop too often. I try not to. So what did I do, you ask? Where was it too high? Where's my levels? Here and up above. But the VPOC is here. So if I come outside and I know these buyers got absorbed, and if I come outside, and I posted this in TraderLab also, I think I actually said 54, 55, can't remember. The volume is here. There's the sellers. There's a couple ways to do this. If you can read it, you can get short here, or you can get short on the retracement. This is a more structured entry, really up to you. And then back here. And then I'm looking for it to fall out the bottom. Same trade. See? So, and I'm looking for it to come out the bottom. So take the short either here, if you can read it, or here on the test, back to here for a scale, and then looking for the continuation down. That's what I was doing. So my next target is the IB low, because I know we had buyers under here, and then hold the runner. Going for that. And so that's the trade, Now I do other things, but I'm going to keep it just as structured trades. So we come down, we make a new low. Again, I'm saying, okay, here we go again. There's a sweep. Icebergs, absorption. Right here, I see the sellers. The buyers are here. Right here is the key. More selling, more selling. The sellers are in here, and here's the icebergs. Here's the icebergs taking the other side. Now, right here, it's either going to be south of the border or reversion. Reversion. Same thing. Out of my shorts, back up here. What's up here? Resistance. Resistance. Where do we come? Here. 53, 54, whatever. Sold it again. Where to? Back here. Where am I going? Down here. Watch. Taken out. So I got my scale. This trade, hasta la vista. Now, I get my buyers here. So what this is, and this is my least favorite trade, just so you know, it's rotational trading. It's outside in trading, mean reversion. Now, in mean reversion, you do not, in my opinion, and I'm just telling you my plan, I will not trade here. It's a target. Mean reversion is coming back to the high volume. Now, here's where the conflict lies. Let's come back. Now, this is a short, but let's come back here. Where is the conflict? Out here and out here. So this might be it, or we might come out here. So either or, we got ETH low, ETH high. There's about, I'll give you a statistic in past performance, not indicative future results, about a 93% probability we take one of them out. That's why I was going for this on the longs. And when I'm short, I'm going for this. and there's a probability. And the way we're stacked here, we can come out either side. There's also to take out the previous high or low. Let me look for it here. Take me a moment. Got a lot of statistics. About an 85% probability we take out the previous high or low. So that's why initially I was going for the long side, because yesterday's high is right around here. And of course, yesterday's low. So I'm working with an 85% probability to take out either the high or low, and a 93% probability to take out either the ETH high or low. Look how we're bracketed here. So when we came in this morning, it was balanced. So we're still doing that. Annoying, but that's what it is. So come back out here, another short back to here, looking to come down. Scale ahead over this, same trade. So I'm doing the same trades because I'm thinking, and that's all you can do is imagine what might happen. I have 93% probability here, 85% probability there, and I missed on the upside. So that's why I was leaning here. Whatever, right? Absorption is here. And what do? We mean revert again. So I know this is miserable. That's what it is. I call it miserable trading because all you're doing is trying to get an alignment. So it looks like we are possibly going to now take the high. There's nothing I can do about that because I can only trade the plan. So that's it. Any questions, guys? It's just what it is. One second, guys. I got a little glitch going on here. Just hold on for 1 second. Okay, I think I'm going to be okay here. So for me, right in here, if I'm doing mean reversion, I have choices. This is the IBF again. It can be a long. So what you have is outside in, outside in. As long as we're in balance, it's two-sided trade. And remember, 85% probability take out previous high-low and 93% probability taking out either ETH high-low. So, pick one. And right now, since we haven't been able to make any progress down here, it seems like we might squeeze out. But doesn't matter. So this is just what you got today. This is two-sided trade. And also, early this morning, when we were talking about today's plan, we also discussed, and I think with Bailey in the Bookmap Discord Trader Lab community, who brought up, is it possible to have a neutral day? And yes, it is, because we are in balance. Questions, guys? Okay, I can come up now for oxygen. I'm going to look at your questions. Breaking a test. Do we buy on the test or should we look for other buyers? Alex is asking, good question, Alan, in the Bookmap Discord Trader Lab community, that after a consolidation, a break, and a test, do we buy on the test or should we look for other buyers in the order flow and execute the trade above them if we see them? I think you have to kind of test that out for yourself. There's two ways to do it. You can lean against the order flow and anticipate, and you got to read it very closely. Or if you're still developing that skill, you want to see a confluence of components. So yeah, the order flow. So maybe, for example, over here, I mean, there's, what can you do with this? You come down, for all we know, it's going to zero. Here you start seeing the absorption. Now you had absorption here, but it's not at a location. This is a scale, if depending where you would take it. That's because that's the mean. Then when you come out the bottom, for me, I'm just looking for it to, go to zero. But now I see absorption here and I see absorption here. So I know I got buying as I'm making a new low. That puts the antenna up, and I, see the icebergs. But that, even if I didn't see the icebergs, I can assume based on this behavior that these guys were absorbed. Once that happens, then my location would be against this because the buyers are there and here. Now I get my buying. Now where's my test against this? And what else is there? My high volume is there. That's where this line is, you see, which was created before we got here. I think. Can't remember anymore, But when I break high, where do I come back? Here. So I got my sellers here absorbed. I get my break high trigger. I get my rotation back and my sellers. And what happened here? This seller was absorbed. I'm above him or her. If I come back with the sellers and I can't get below this, which is why my stop would be here, this is called the IBF, then I'm coming back here and then potentially, wherever, and then the wherever is up the food chain and then possibly back again. This part you don't know because it's still mean reversion until it changes. Does that answer your question? Alex, did that help you out there? Did that answer that? Dylan in YouTube, hi. You're asking why I use the IB instead of the value area. You give the IB more importance. Are you talking developing value area? I don't do a lot with the value areas, except in the IBF, the opposite developing value area. For example, if you took this long, I have shared, 60 PDFs of structured trades. This is actually a target for the opposite because 70% of the volume currently is inside this range. So if I get long here, the idea of the long is to scale at the mean and then come up to the developing value area high. This is the target. Now that's a purely structured trade. This trade would be over here. Now for me, I'm aware of it, but I look more over here because this is the outside edge of the consolidation and this was too high. So if we're going to be more structured, then we could just exit here. Limit order ahead of it, or you're going to, see, I look a little differently at this stuff. I look at the swings and I know there's stops here, stops here, stops here, stops here, because that's what retail traders do. So when I come up to a location, now here I'm seeing absorption, just as an example. I have a level here. Well, this is above this. There's no right or wrong for this. I hope that answers your question. If you're trading very structured and depending on your, it's just about what your statistics and your skill set, where you're developed, and it doesn't matter. It's what works for you. If we know statistically and I think Rod, who is in Trader Lab, shared some of his stats. I think it's in the 80 percentile. And I don't know that's really the right stat. I'm just trying to recall it that we come across to here. So if whatever that stat is, and you have to vet that for yourself and confirm it naturally through replays and just looking at this stuff, this has a good probability. So the trade could be from, from here to there, and you're done with it. Now, I don't have any problem with that. See, that pays the bills, right? Now, but what I do is a little different, but it doesn't matter what I do. We have the sellers here, right? Let's look. And we have sellers here. So I got this. Now let's look at this. Is this a short? There's resistance. Here's my sellers. There's my buy stops. There's my sell iceberg. So I have confluence right here. So let's look at it. And where am I? I'm at an outside edge. This is low volume zone. And in the profile world, mean reversion is outside in. The joy of trading mean reversion, which is my least favorite condition, is trying to find the outside edge. I mean, is it there? Is it there? Is it there? Where is it? Well, when I look at the profile, and I'm not looking at the value area high, I'm looking at the structure. Because what this says, let's look at the language. This is like a foreign language. This consolidation at the moment was too high. The shopper said, I'm not paying that. They left the store. Now I come down, I come around, and I'm doing this, okay? Well, where's the outside edge? Other than knowing we don't know, it's going to be out here potentially in what's called the low volume area. And this is too high. So I know if I put a trade on, wherever I put it on, my stop needs to be out here above this right here. So let's look at the behavior. So let's assume I put the trade on here. My stop's got to be out here. Does that fit my trade plan? That's 10 points. Maybe not so much. See where we are? Outside, low volume. So I'm looking for a short, but I can't take a 10-point risk. Where's my level? There. This is how the profile works. Here's my buyers. There's my absorption. So my antenna is up over here. I can't trade it. And my goal is to come back here. Mean reversion. So it's the same trade from different locations. Actually, but I want you to see the rationale. This is a short that I cannot take because I'm not outside far enough. This is the outside, and that's called a low volume node. And what's resistance? This. So when I look at the profile, and this is why I trade with the profile, I don't use any indicators, is resistance because it was too high. That's how the auction works. It's going too high, too low, too high, too low. Consolidation, high volume, retail. And if we leave the store, it's saying it's too high. Then if I come back to there, then it's still too high unless we take it out. So I got resistance. Now, where do I get short? Somewhere out in here. There. And where am I going? Mid, VWAP, VPOC, and maybe back around again. You know. Does that make sense, guys? Costello, as far as getting short, you're asking me what to take a short from the IB high? Is that what you're saying there? Yeah, maybe. But here's the thing. IB high is, I forgot where it is here. I think it's, where's the high? Covered up for me. 70, right? Isn't this it? 70-ish, I think. It's covered up. So this is the high. There's stops above the high, and there's stops under the low. We've been popping the low and coming back in. Probably the shorts that are sitting in here are going to get tagged. And that's not a prediction because I don't know. So I can't, I just kind of try to get in alignment. I figured out a long time ago, I don't know what's going to happen. So that's kind of the way I operate with it. So if we're rotating, the possibility, now remember, part of the plan for today is the possibility of a neutral day. 85% probability we take out either yesterday's high or low, and 93% probability we take out either ETH high or low. We haven't done either of those. What are you going to do? As Dirty Harry says, do you feel lucky? I think that's what it was. Well, do you? Because that's it. Luck, structure, trade management, getting risk neutral, trying to operate in what you perceive to be the condition of the market, which is rotational. So until we break out of one of these, and it could be either one, it's outside in. That's it. So the current context, this is a very difficult part of anything in trading, is the difference between directional trading and rotational trading. Because a lot of us, most traders, when they're developing, kind of do a one-size-fits-all methodology. They go back, they look, they curve fit indicators, and they think now the market will repeat. Well, it doesn't repeat. It rhymes. History rhymes. It's not exactly the same. Participant behavior rhymes. But where it happens, how it happens, what are all the inputs that create valuation? They're constantly changing, and reports or geopolitical or just, full moon, everything has an impact. So we don't know when the perception of value might change. What we can tell is the purpose of the market is to figure out what's too high, what's too low, and what's fair. And it does it in all time frames and fractals. Right now, this is the retail price. So if we come out too far, the nature of this is to come back here. That's why it's called mean reversion. Trader Lab, you have several plans. You have a mean reversion plan, because that's not the get on the bus and go to the moon plan. And you have a directional plan. And intraday, it can be directional and then change into rotational. You need to know where you are. Now, when you go to a higher time frame, we can still come back up in here because the market is short. We've taken out the low a couple times, and we haven't gotten the selling down below, here. And why did we not get here is the question. The shorts are going for this, including me on the short side. It's not happening. If you're sitting short, what does that mean? Well, it means maybe you're going to get squeezed out. So the question was, would I take the short from the top? The answer is yes. Not a recommendation. So if we squeeze these shorts out, and nobody knows, right? If you know, DM me, we'll talk. If we squeeze out the shorts, and that's all it is, we fulfill some of these stats, and I come back inside, it's still mean reversion, and that's a neutral day. I'll come back here and potentially just rotate around. If I take out the high, squeeze, go nowhere, then the longs that are in here with their stops under the low, this low and here, they can get taken out later, and we can have what's called a neutral extreme day. So all it is possibilities. So for me, the current trade is short to here, come down, and then potentially rotate back up or not. We can fall out the bottom anytime. We can squeeze out the top anytime. And the thing about it is, in trading, we can't predict what it'll do. We certainly can anticipate what it might do. I hope that makes sense. Does that help? Tiger Williams, have you gone to the Bookmap Discord Trader Lab community? You downloaded the 60 PDFs of these structured trades, watched the webinars? The answers are all there. But to understand structured trades, you have to develop an understanding of the condition of the market. The thing about a structured trade is it's not mechanical. And I'm not speaking to you about this. I'm speaking to all of us. We all want red light, green light, mechanical. It does this, I push the button. It doesn't work that way. You have to understand the condition of the market, and then the trades that are qualified are the only trades you take. The locations are the only areas that you look for a trade, which is out here. And the mean is over here. Mean reversion is outside in trading, wherever the outside is, not inside out. And many traders don't know the difference. In a running market, we may trade inside out because it's a different condition. So the trades are, it's called context or context specific. So you got to know the condition of the market to overlay the structured trades that are qualified to operate in it. Then your job is minimum two lock configuration. The job of the first contract is to buy the stop for the runner or the second one, And there's a few ways you can do it. If you sell this, you could scale there, or you scale at mid and VWAP because you might get the mechanical retail traders who just buy the mid, buy the VWAP, But the retail price is here. If this price up here is too high in a fractal, we are coming up in a higher fractal. Think Russian dolls to come back here. That's the trade. Now, theoretically, you could be done with the trade here, or you could be looking to scale here or here, just saying, and then look for it to fall out the bottom if you're inclined. And you could always take stops. I mean, stops are cost of production and overhead. That's just the nature of it. So what this trade is, it's this to this, or this to this, or this to risk neutral, stop here, and then trade management. All those choices are yours. Does that make sense? So Tiger, your answer is in the Trader Lab. Trader Lab is a free community, remember. So, what I've done is shared almost 45 years of my experience and trades that I have developed over many years. And as traders develop, and this takes time, there's no shortcut if you want to be in anybody wants to be in this business. Everybody says, here's the one thing you need, come to this chat room, learn to trade. I'm going to say that's not what Trader Lab is. Trader Lab can help you. Trader Lab cannot solve you. You have to solve you. The you part of this is the emotions, the fear. I call it Hyde, Jekyll and Hyde, the fear, the things, because don't forget, as human beings, this is the opposite of what our wiring is. We are running in front of the bus instead of running away from it. We are grabbing the saber-toothed tiger by the tail, not our wiring, which says, don't get eaten, So when you are looking for a trade, you're full of fear. So am I. Why? Because we're wired for it. So then the thing is, if we have statistics and understand market mechanics, then we have to manage our fear, anticipate our fear, and put it aside. That's what I do. And it took me years to figure that out because I thought it was willpower. It is not willpower. It is statistics. Willpower in an uncertain random environment cannot overcome the wiring, the triggering process of fear and run the other way, fight and flight. Doesn't do it. Statistics become tangible. You can open your trade plan to this trade and go, what is my probability of coming here? And you will have a statistic for it if you've done the work. That gives you the ability, or better ability, because we're still human, it never goes away, to operate in this uncertain environment. The casinos operate every hand in an uncertain environment. What do? They have what? Statistics. They play the game exactly the same way. They don't skip the next hand if a gambler walks out with a suitcase of cash. They don't make up games. They don't get bored. They have 5 losers in a row. They still play the 6th hand exactly the same way. Are you doing that? All the collective you. If you're not, then you're sitting with the gamblers. And I suspect it might be better to sit on the house side of the table. To get to that, you got to do things differently. You got to rewire your brain, and your belief system might not be in alignment with the reality of the business. We believe it's an indicator-based business, and it's very simple to believe that. You get a software toolbox with 100 indicators. Now you know it's only a matter of the right indicators, the right time frames, and the right mix, and it's like a smorgasbord, and you're going to have an ATM in the basement. I'm going to suggest, based on the statistics of retail trader success, which is dismal, that might not be a viable process that one can build a sustainable business on. Now, I know everyone here is special, and you might be special. You might be the one who goes to Las Vegas and continually walks out with cash. But the casinos have done really well playing the game the way they do. So we have a template of a successful business model. I had to change my thinking many years ago about what this business is. It's not about predicting or being right. It's about understanding market mechanics, how it works, why it does what it does, and trying, and that's all you got, trying to get in alignment with it. That's why this is a short, and that's why I'm still looking for this, unless it does something different. What else am I going to do? This? Yeah, I already did, Costello. Watch, I already narrated this. Watch the stream, and I actually already did this. So, by the way, this stream is only available for traders in the Bookmap Discord Trader Lab community. It's exclusive content. Now, the Trader Lab is free. There's no cost. You do have to kind of go down there in YouTube where it says Discord, and you need to verify your email address so we know you're not a spammer or that kind of thing. Right? Yeah, Mr. No Luck. Yeah, Mr. No Luck. Be positive. How about Mr. Good Luck? Now, where are we? We're back here. This is the next target coming down, and here's absorption. Now, when you see absorption, is it a long or is it just shorts covering? This is the next target. So let's talk about this thing. Short, target, potential target, or 85% probability, 93% probability-ish. One of them will go. Remember? So I trade with statistics. I'm also clueless, not ignorant, clueless because it's random. So I'm not responsible for what the other traders do here. I know there's buyers right here, and it could also be traders like me who would be taking a scale here in case we just do a blip and revert, which we can. That's why this is also a target. Then if I can get under this, I'm going for this, and I have 5,700 below. Who knows, right? All this is on the price map before the fact. All this is in our trade plans and Trader Lab before the RTH open. The ETH suggested two-sided trade. And that's because in the ETH, we bracketed yesterday's high and low, and we were rotational. So coming in for the RTH open, we were looking for two-sided trade, but squeezing. So the plan was longs first, then shorts. Remember? So you saw how I traded it. How it turns out is how it turns out, right? I'm just saying though, but that's the best you got, at least the best I have. I can't predict anything. I truly don't try to, because early on I thought this business was something of being right and predicting. I don't think the casinos can predict the outcome of any random hand. And I can't predict the outcome of anything else myself. So if they can't, and they've built larger casinos, notice the icebergs here? So let's watch. Sellers are taking on the buyer. Buy iceberg. You got a fight going on right here. So let's watch the behavior. Remember statistics. So for me, if I wasn't streaming, right here, hanging out. I don't trade, or I should say initiate trades when I'm streaming. I do manage. I have open trades. I got to manage them. But this is your short. So Trader Lab, the idea of the Trader Lab, at least what I have found, scalping. I used to be a high volume trader. Many years ago. I don't do it anymore. And I wouldn't call it scalping per se, but it was NQ. So, very volatile market, and this is a long time ago. Let me just try to think how long it was. Well, over 20 years ago. Okay, so different world. Okay, so and I found I mean, it got where I was going to have to get a membership because my cost was so high because of the volume that the only way I could lower my cost was to get a membership. And because my broker was my partner, you know, 25% of my gains would go to my broker. And when I had a losing day, which I had 25% more, I'd have my losses and 25% overhead. Well, many traders, now I'm not saying you can't do it. I'm just talking about me. And it does take a lot of concentration and you will get fatigued. And I found to be in the business of trading, the payday is this. You know, if you're a small retail trader and you're going from, call it 60, you know, to 30 or wherever you're going down here, and you're going to take pieces of it or stops, we got to watch this right here. 20 points, 30 points, how many of those do you need a day? I found that if I'm fresh as a daisy, I'm very clear-minded. I haven't been going chop, 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 and trying to grab pieces and exhausting myself. And cognitive fatigue is a reality. You just aren't going to be as sharp when you're taking 100 trades. It's just not going to happen. You're going to start, you'll make errors. Yeah, things will happen. You'll just miss stuff. You'll get myopic. It's normal. Now, it doesn't mean you can't trade a little envelope or, a little VWAP thing. That's fine. Where are the dollars? Me? And it's just personal. It doesn't mean for you. For me, this is why I trade for this. And if I get to 5,700, it's another, 30 points, 40 points. So what I'm trying to say is there's no right or wrong in any time frame. What happens is you will find your groove. I call it a groove. And what that is you're going to find your fractal. I trade in multiple time frames as you think of them. And what they are is Russian dolls. You got the big one is the higher time frame, call it the intermediate time frame. And then you go down in time frame. When I'm in this thing, I'm in the little Russian doll. And I can get right there if I want and use that for trade. Right there. So that I trade from because it's a Russian doll. And if you see that little high volume, does that look familiar? I'm just grabbing it so you can see it. What is this? Sellers are here, buyers are there, sellers are there. Break. Short against there to here. And where am I going? You know the trade. Been yapping about it all morning. Through here. So I'm just giving you an idea. I'm not saying good, bad, indifferent. I have no opinion on what anybody else does. I have just found for me, if I trade a larger range, it's easier for me to get risk neutral and then see what the other participants do. And of course, I don't know. So I trade with statistics, structure, and sense of smell. Because in some of it's experience, my experience suggests this was the way to go for the short side, which everybody knows in the Trader Lab. But it doesn't preclude taking longs or being upside down and getting squeezed out because that's just trading. But overall, this is where I'm trying to go. And look at all the buying here. Does that make sense? I hope you got something out of this today. It's kind of a maddening thing, because of its volatility and rotational aspect. Does this make sense? Yeah, it's not an easy day, guys. In the Trader Lab, they're saying, you're like a whirling dervish with this stuff. Now, right here, look at this. This is a reason to close this trade for me. It's not a recommendation. I still got my targets open down here. If I close the trade here, I may put it right back on again. If it comes up here, I'm going to be looking at it here, this volume up in here or up in here to possibly put this trade back out again, if that is what I did. And the thing about what I do doesn't matter. I take stops, believe me. I take stops you know, what was it? Made in USA, proud to be, well, I'm proud to take stops. Now, I don't like them emotionally, but it's overhead and cost of production. How do I protect myself, my psychology, and my account? Because I just follow a process. Wouldn't I cover here? Because of this. But what do I see here? 300 stops. Look at the icebergs here. 900, 800, 900. It might only be short covering. It doesn't mean it's time to get long and we're going to take the high of the day out, which we might. So this, for me, I can cover right here. Where's my micro high volume? Let's even go look at the structure. It's right there. That's resistance right there. I see this. I know this was too high. My buyers got stuffed here. The sellers are below them. This is resistance. You could be out of the trade here, or if you read the order flow a little more depthly, you could be out of it here. So you could be out of your short. I'm okay with that. It's from there. What do you think? Are you interested in this? This is what Trader Lab is built on. And you don't need to trade like this at all. You probably can come up with a better idea. And if you do, doesn't matter, come to Trader Lab. It's a community of traders that have come together to leverage their experience. We all want to get better. And there's no right way or one way to do any of this. But if you're waking up in Trader Groundhog Day, working hard and going back and looking at what happened and now trying to fit it so next time you get it, in my opinion, and I'm saying from my experience, that's not the answer. It's part of the problem. Most traders remember that it's the right indicators, the right time frame, the right mix, and then it's plug and play, red light, green light, that kind of thing. In my opinion, it's not. Notice where resistance is here. So what I do is if I look here and I see this, I can cover here, and then where's my IB, by the way? Did it get covered up? Yeah, this is my IB. This is a short back to here. That's all this is. Cover short, or let me give you the or. Nada, you're hanging out and your stop is out here and you're going to just give it the space. That is trade plan specific. We have traders in the Trader Lab. We're going to put the trade on and go to the gym. We have other traders that are going to micromanage it. Me, cover here, put it back out at the IB. This is called the IB continuation trade. It's a structured trade. Where's that IB? It was covered. There it is. So when I come up here, what I know about this, and I'm almost out of time, is there's going to be stops at these up here. So, and let's go a little further. I have high volume sitting up here, which is coming from here. And it's right there. So when I come up and squeeze, I'm then looking for the order flow. And here it is. And I won't know, no way until I see this. Trigger. Now this is too high. Microstructure. This is that Russian doll, the fractal. Come back here, too high, short. Looking for the low of the day, scale, the rest of it. Final questions. I got 1 minute. If you're interested in this, come to the Trader Lab. There's a link in the bottom of YouTube, but there's no cost. You can take advantage of all the education in the Bookmap Discord Trader Lab. There's also the Trader Lab Academy, which gives coaching and mentoring for Bookmap subscribers. There is a free digital version of Bookmap. If you're interested in that, there's a link in the bottom of YouTube also. And if you're a Bookmap subscriber, you can then attend the Bookmap Academy, which is mentoring, coaching, and a lot of good stuff. And it's all available at no cost. Please give a thumb up and a like on the way out. If you want to visit the Trader Lab, you're all welcome. There's no cost. You can download 60 PDFs of these structured trades that I'm sharing with you, and there's a library of webinars that you can also review. Thanks, guys. Have a great day. And remember, our targets are below. Outside target is 5,700, and none of these are trade recommendations. Thanks.